I became quite constructive on Ethereum because in our view, I think Ethereum is one of the most important macro super cycles for the next 10 to 15 years. And an opportunity came along where I worked with another group called Mosaics. They're good business partners of mine. I've done business with them for about 15 years. And we had an opportunity to create an Ethereum treasury on an existing company. So this idea really made a lot of sense to us because I think Ethereum is one of the most important sort of super cycle stories for the next 10 to 15 years. And here was a chance to create a company or transform a company in the same way that MicroStrategy did with Bitcoin.
As Ethereum pushes past $4,700 and investors set their sights on $10,000, Bitmine is emerging as the bridge between institutional capital and one of the most powerful super cycles in modern finance. Tom Lee, chairman of Bitmine, is doubling down on Ethereum as the digital asset reclaims the $4,700 level, with bullish momentum pointing toward $10,000 as the next key milestone. Lee describes Ethereum as one of the most significant macro supercycles over the next 10 to 15 years, positioning Bitmine's treasury strategy as a transformative model similar to MicroStrategy's Bitcoin playbook. Unlike buying Ethereum or an ETF directly, Bitmine increases Ethereum holdings per share, creating compounded value for investors. For instance, from July 8th to August 24th, Bitmine's ETH per share expanded from $4 to $40, a tenfold rise that far outpaced Ethereum's 50% gain over the same period. This compounding effect has lifted Bitmine's stock from $4.50 to $43, offering both stronger upside and downside protection, as accumulated reserves help preserve value even in market corrections. With a simplified balance sheet equity only, no debt and over $1 billion in weekly institutional inflows directed into spot ETH, Lee argues that Bitmine is positioned to outperform ETFs while accelerating Ethereum's role as a future cornerstone of global finance. Crypto's evolution is just getting started. Major shifts are on the horizon. Subscribe and turn on notifications to follow every key move in Bitcoin, Ethereum, and the future of global finance.
Someone's going to say, well, if Ethereum can go up a lot, why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury, there was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy one Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy's stock did better than Bitcoin. In August 2020, MicroStrategy's stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day. To give you a perspective, the stock was $4.50 when we announced the treasury strategy. And today the stock's $43. So it's gone up by 10 times. Ethereum has risen by 50% in that period of time. So Bitmine has outperformed Ethereum. You're growing your Ethereum held per share. So if you took the original example, okay, so let's say on July 8th, you had $4 of Ethereum or $4 worth of Bitmine stock. And then let's say Ethereum went down 50%. The original person only has $2 of Ethereum because they bought it for $4 and it went down 50%. But today, someone has $40 worth of Ethereum, and if it goes down by 50%, it's $20 per share. So you actually made money even though Ethereum fell 50%.
Wow.
So it's a crypto treasury that's properly managed and executed will vastly outperform an ETF or the Ethereum itself. That's why MicroStrategy as a company is larger than any Bitcoin ETF, because institutions realize it's better to buy MicroStrategy than to buy a Bitcoin ETF. So it's very simple. The company only has a very simple balance sheet. It only has equity and it has no debt. So the company is raising money by selling shares primarily to institutional investors. So institutions are buying Bitmine's stock, and then the money that's raised, and it's been running at about $1 billion per week. So institutions are buying about $1 billion worth of stock every week, is used to buy Ethereum spot. So just buying the Ethereum token. There are 3 or 4 exchanges that are executing the trades for Bitmine. So the purchases are being made, in conjunction with crypto exchanges buying Ethereum for us, and then it's held in custody.
As Bitcoin treasuries reshape corporate balance sheets, Ethereum is now stepping into the spotlight, and Tom Lee believes Bitmine is positioned to lead this next wave of institutional adoption. Tom Lee notes that while creating an Ethereum treasury is relatively easy, true success hinges on institutional participation. Drawing from Bitcoin's example, he explains that of the 53 Bitcoin treasury companies, only 3 MicroStrategy, Metaplanet, and Similar Scientific have meaningful institutional backing, which is essential for sustaining growth in holdings per share. In Ethereum, Bitmine has already distinguished itself as the largest player, nearly 3 times bigger than rivals, with $2.6 billion in daily trading volume and a $10 billion market cap. Its liquidity has made it one of the most traded stocks in the U.S., a key factor in attracting institutional capital. Lee highlights the power law dynamic, where larger players enjoy disproportionate advantages, reinforcing Bitmine's positioning. While Bitcoin's having cycle once defined price trends, Lee argues that institutional demand and government adoption now play a far greater role. With 95% of Bitcoin mined and most institutions yet to gain exposure, the supply-demand imbalance could drive prices higher. For Ethereum, Bitmine is also targeting 8% to 14% yield generation on its ETH holdings, tapping into emerging opportunities across NFTs, Web3 gaming, prediction markets, digital identity, and stablecoins, further strengthening its long-term value proposition. Let's get back to the video.
Well, anyone can create an Ethereum treasury because we've seen it in Bitcoin. There's 53 Bitcoin treasury, 53.
Oh, that's a lot.
There are, but there's really only a handful that have come championed by institutional investors. So of the 53, I'd say only 3 of them actually have institutions buying the stock. MicroStrategy, Metaplanet, and Similar Scientific.
Yeah, maybe that's why I only heard those 3 stocks.
Correct, that's right. So the other ones are not going to be as successful growing the crypto held per share. Because that's the most important distinguishing factor of a crypto treasury is to grow the holdings per share. So when we look at the Ethereum treasury space, Bitmine has already separated itself because it's far larger than anybody else by almost 3 times.
Yeah, it is.
And the stock is one of the most liquid stocks in the world. So a way to measure that is trading volume per day. Bitmine trades at about $2.6 billion of stock every day. It is the 20th most traded stock in the United States. And when a stock is liquid, it attracts institutions because institutions only buy stocks that are liquid. They want to be able to get in and out of a stock. And that's why Bitmine has attracted so many institutional investors. Also, in terms of size, Bitmine's market cap is around $10 billion currently, which makes it one of the largest stocks in America today. So institutional investors have to buy large companies because that's going to be part of their benchmark. So that's what they call the power law.
Wow.
That in any competitive system, the larger players start to have a disproportionate benefit. And that's why MicroStrategy's valuation is growing, because it's the largest. So it's not the smallest company that gets the highest valuation. It's the largest that gets the highest valuation. You know, we've written about Bitcoin for a long time, almost 9 years now.
Yeah.
And I've respected the halving cycle because it makes sense. There's a block reward that's shrinking. So therefore that has some effect on mining and the proof of work, and therefore it should have an effect on price and supply.
Yeah.
But that's really a liquidity framework. And liquidity meaning, you know, buying versus selling. There's a much bigger factor driving liquidity in Bitcoin today. Well, there are two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, you know. And this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin. So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that that will cause an asymptotic rise in Bitcoin's price. That's the first driver. The second driver is that governments are viewing Bitcoin as a reserve asset. The United States is going to... they're not the only country. El Salvador was the first, really.
Yeah.
And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't a halving cycle. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch, there's more money lost worrying about a top in the cycle than in buying good ideas. Okay? Meaning, if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn.
Bitmine has solidified its position as a leading Ethereum treasury, recently acquiring 46,255 ETH worth $201 million, bringing its total holdings to 2,126,018 ETH valued at $9.24 billion. The company's approach growing Ethereum per share, maintaining a highly liquid and scalable structure, and attracting significant institutional investment demonstrates a disciplined strategy for long-term value creation. By integrating emerging opportunities across NFTs, Web3 gaming, prediction markets, digital identity, and stable coins, Bitmine is redefining how digital assets can enhance corporate balance sheets. With strong downside protection and a focus on yield generation, the company is positioned to accelerate Ethereum adoption at the institutional level while establishing itself as a central player in the evolving landscape of global finance. Could Bitmine's Ethereum strategy be the next big game changer for institutional investors in crypto? Early movers win in crypto. Subscribe now to catch every critical shift in Bitcoin, Ethereum, and digital assets.